Step number 2, you're ready to go out there with a realtor and find the house that you're looking for. Now, you know, it's human nature. If you're approved for $300,000, most people really want the house that's $350,000. It's just how things work. But it's really important that you stay within your approvability. Where you're approved, what's the sense in wasting everybody's time to go see a $500,000 house if you're approved for $400,000? So you have to keep your expectations realistic, and the location. See, a location, in one location, a $400,000 house may be incredible, and another location, a $400,000 house may be 1,000 square feet. So which one do you want? How far is your commute? You need to look at all these things as far as what's reasonable to you. What do you really want in a house? And that's where a good agent is important. Now, there's a couple of things that are really important about the agent that you pick, and we're always there to help you pick an agent that's going to work for you. Number 1, you want somebody with experience. Number 2, you want somebody who's a good negotiator, because they're going to be negotiating. Half their job is finding the house, the other half is negotiating on your behalf to get you the best price. Now, one of the things I personally do is, see, I don't give a borrower or even a realtor the DU approval or the pre-approval letter until I know how much the offer is for. Because why would I give a letter saying you're approved for $450,000 if you're going to offer $425,000 on the house? See, I want to give as exact as possible, because otherwise that other realtor could be saying, yeah, he's approved for $450, but the letter, you know, he's only offering $425. Maybe we could squeeze him for a little bit more. I don't want that to happen. Myself and the realtor you choose, we're going to team up, and we're going to see what we can do to help you get your offer accepted. Now, what do I do to help you get an offer accepted? Instead of just sitting back and waiting for the realtor to make an offer, and right now we are in a crazy time. In Southern California, where I am, if a house is in the $450,000 range, they're going to get not 1, not 5, not 10, but they could get 30 to 50 offers on that one house. So your offer needs to stand out somehow. And usually it's offering above the asking price. Hey, they're going to look at who has the best credit, who has the most likability as far as going to be approved. You know, what deal do they like the most? Because, you know, an agent wants to know, am I going to get paid? Is my client going to go crazy trying to get this done? Or is this going to be an easy one for them? So I personally make a phone call to the agents, and I tell them, look, this is super important. This is Chris Trapani, the Mortgage Pro. I have a slam dunk deal ready to go here. I have a client, they have a 702 FICO score, they have this much money, and they have this much in reserves, and their debt ratio works within the guidelines, and I'm going to try and sell them on what a great borrower you are. And that's what a really good loan officer is supposed to do. So we work it as a team, the realtor, myself, and yourself, if we're working together, and we try and get your offer accepted. And once we do that, we take it to the next step. Okay, let's assume that we worked hard, we worked as a team, we made an offer, we spoke to the listing agent, we got your offer accepted. What's the next step? The next step is we open escrow. And why is opening escrow important? What is that? What is escrow? Escrow companies, what they do is their job is to act as the fiduciary. They make sure everything is legal, that the loan and the buyers, all the information is recorded with the county. They make sure all the money that comes in, your deposit, and all the money coming from everywhere, the loan money, it all comes together. They hold it, and when the time is right and the loan is recorded with the county, they're going to divvy up the money. Now, in a number of states, we do not use escrow companies. In many states, they use attorneys, but basically it's the same process, only the attorneys probably charge a little bit more money. But it's the same process. This is what we do and how it works. So now we've opened up escrow. We're asking them for all the fees. What are we asking them for fees for? Well, there's escrow fees and title fees. And we have to put all the fees together with the lender fees, such as processing and underwriting, and let's see, the appraisal, and how much is the recording fees going to be. And there's all these different fees. Realize that there are probably over 25 people that are going to work on your real estate loan. That's pretty crazy. But there's 25 people. Those people obviously have to get paid. So there's a whole bunch of different fees. Different states have different amounts. Depends on where you are. But we also very often have what's called an impound account. We're going to open up an impound account, which is your personal savings account. And the job of that savings account is every month when you put a payment in, a portion of that money is going to go into that savings account, your savings account, for property taxes, and a portion is going to go in for homeowners insurance, so that when the property taxes come due and the homeowners insurance come due, they can write a check or electronically pay it. That's obviously, I'm showing my age here, writing a check, but they'll pay that money for you out of your account. Now, it costs money to set that account up. See, it depends on what month of the year the taxes are due in your state and what month you're in. As an example, here in California, in the month of September, you'd have to put 9 months property taxes up front, because the next month, 6 months property taxes are due. And they have to have enough money so that when the property taxes come due again every 6 months, that they have enough money. And when the homeowner's insurance comes due, a little piece of your payment every month goes in, so that in 12 months, they're ready to make another payment on your behalf. If you ever sell the house, refinance the house, that money in the impound account comes back to you because it's your money. So we open up escrow, we ask the escrow company for all those fees so that we can put them together in an orderly and legal fashion, so we can give you what are called loan disclosures. Now, the loan disclosures include a loan estimate. The truth is, the loan estimate is not exact. It can't be. But what they do is they overdo, and they raise some of the fees on purpose, not that you're going to pay them, but they have to disclose, and they can't, if the fees are too low, they can't raise them later, because that would be illegal in most of those fees. So they put them high, and if anything happens, they're covered, but most of the fees, or many of the fees, will actually be lower. Now, you're going to sign that loan estimate, and that allows us to go to the next level. You're going to sign the loan estimate with a bunch of forms. One of them is an intent to proceed. So that allows us to go to the next level. And the next step is going to be ordering an appraisal.